Hey everyone, and welcome back to the channel. Forget everything you thought you knew about Keurig Dr Pepper. The company just dropped a bombshell, an $18 billion deal to buy a European coffee giant, JDE Peet's. And that's not even the biggest news. After this massive purchase, they're breaking themselves in half to create two brand new powerhouse companies. Get ready because this is huge and it's going to affect everything, from your morning coffee to what you grab at the grocery store. Let's get straight into it. Keurig Dr Pepper, the company behind your favorite fizzy drinks and that handy single-serve coffee maker, is making a truly transformational move. They're spending about $18 billion in cash to acquire JDE Peet's. If you're not familiar with JDE Peet's, think big-name coffee brands like L'Or, Jacobs, and of course, Peet's Coffee. This isn't just a simple purchase, it's a strategic masterstroke designed to redefine the entire beverage industry. The offer price for JDE Peet's shares represents a huge 33% premium, showing just how serious Keurig Dr Pepper is about this deal. So why would they make such a massive play? Well, it's all about focus and unlocking value. Once the acquisition is complete, Keurig Dr Pepper will split into two completely independent, publicly traded companies right here in the US. This effectively unwinds a huge 2018 merger that brought together soda and coffee under one roof. Now they're going in a totally different direction, aiming for specialized market leadership. So, what does this mean for the future? Get ready to meet two new giants. First up, we have Global Coffee Company. Imagine the ultimate coffee powerhouse. This new entity is set to become the world's largest company focused solely on coffee. Think about that for a second. Number one globally. It's projected to rake in about $16 billion in annual sales. This company will be a truly global player, reaching over 100 countries. It brings together Keurig's dominant position in single-serve coffee in North America, that's your Keurig brewing system and all those K-Cups, with JDE Peet's massive international reach and diverse brand portfolio. We're talking about combining billion-dollar brands like Keurig, Jacobs, L'Or, and Peet's. Plus, you'll see other beloved brands under this umbrella, including Douwe Egberts, Kenco, Pilao, Old Town, Super, and Moccona. This means an unmatched selection of coffee across all types, channels, and price points, from your quick morning pod to gourmet blends. They'll have it all. The Global Coffee Company will even have its global headquarters in Burlington, Massachusetts, with an international base in Amsterdam, Netherlands. It will be led by Sudhanshu Priyadarshi, who is currently Keurig Dr Pepper's chief financial officer. This company isn't just about selling coffee, it's about leading the next wave of coffee innovation worldwide, bringing new ideas to markets faster than ever before. And then there's the second new company, Beverage Company. This will be a scaled-up challenger in the North American refreshment beverage market, focusing on all those drinks you love beyond coffee. It's expected to generate about $11 billion in annual sales. This company will leverage an impressive lineup of iconic brands that are staples in many American homes. We're talking about your favorite carbonated soft drinks like Dr Pepper, Canada Dry, 7-Up, and A&W. But it's not just about the classics. Beverage Company is also expanding rapidly into high-growth categories, such as energy drinks, functional beverages, and even ready-to-drink alcoholic beverages. So whether you need a pick-me-up or a refreshing bubbly drink, this company will have you covered. This new beverage giant will be headquartered in Frisco, Texas, and led by Tim Cofer, who is currently Keurig Dr Pepper's chief executive officer. He stated that this company will have a dynamic approach to capital allocation, meaning it'll be flexible and smart about how it invests to keep growing. This isn't just a simple corporate reshuffle. This is a deliberate strategy to create two highly focused powerhouses that can thrive in their respective markets. For years, Keurig Dr Pepper has had both coffee and soda under one roof. While that had its benefits, sometimes a conglomerate company can face what's known as a conglomerate discount, where its full value isn't appreciated. By splitting into two pure-play companies, they expect to unlock significant value for shareholders by allowing each business to focus entirely on its unique market dynamics. And the benefits don't stop there. This merger is expected to generate significant cost savings. We're talking about $400 million in cost synergies over the next 3 years. These savings will come from streamlining operations, optimizing logistics, and smart procurement across the newly combined coffee business. These kinds of efficiencies are crucial in today's competitive and sometimes volatile market, especially with fluctuating coffee bean prices. The expectation is that this will boost the company's earnings per share right from the first year, making it a financially attractive move. Plus, the separation into two companies is planned to be tax-free for shareholders, which is another smart financial play. The global coffee market is a massive $400 billion industry that continues to grow, especially in emerging markets. Meanwhile, the North American refreshment beverage market is a huge $300 billion category. By creating two dedicated companies, each can pursue tailored growth strategies, invest in innovation that truly fits its market, and optimize its operating model without being held back by the complexities of a diversified portfolio. For instance, Keurig Dr Pepper's U.S. coffee division has seen shrinking sales recently, with a slight decline in single-serve coffee pods and coffee maker shipments. This new structure is a clear move to revitalize and strengthen their coffee presence globally. What about the timeline? The acquisition of JDE Peet's is expected to close in the first half of next year, 2026. Following that, the separation into the two new companies will happen as soon as possible. For investors, the news has been a bit mixed. JD Peet stock saw a significant jump of about 18% when the deal was announced, clearly reflecting investor excitement. However, Keurig Dr Pepper shares were down by about 3% in pre-market trading. This could be due to various factors, including the debt Keurig Dr Pepper is taking on to fund the acquisition, or simply the uncertainty that often comes with such a large-scale reorganization. However, the company has committed to maintaining investment-grade credit ratings for both of the new entities, which should provide some reassurance about their financial stability moving forward. Annals don't foresee major regulatory hurdles for this deal, which is good news. They point to the highly competitive and fragmented global coffee market and JD Peet's relatively limited market share in the U.S. as factors that should ease the approval process. This move is a bold bet on the future of the beverage industry, recognizing that specialization and scale can lead to greater success. It means that the coffee you drink and the soda you enjoy could soon be coming from companies with a sharpened focus, innovative drive, and a clearer mission. So what do you think this massive shakeup means for your favorite brands? Will you be investing in the new global coffee company or the beverage company? Let me know in the comments below. And if you found this breakdown helpful, please smash that like button, subscribe to the channel for more insights into the financial world, and don't forget to hit the notification bell so you never miss an update. Thanks for watching, and I'll see you in the next one.